Eastern Standard Time. Then we have a session from 1 to 3 p.m. The session that we're in right now from 7 p.m. to 10 p.m. and then another session from 3 a.m. to 5 a.m. So there are a number of prime windows that we can focus on, once again allowing us to spend a minimal amount of time in front of our computers. Online trading is now becoming billed as the single most accessible way an individual will have to create wealth on their own in the upcoming decade. We're at a point where we all have access to high-speed internet. The technology, the access to charting applications that were once only available to professionals are now readily accessible to the public, and online trading platforms have become extremely user-friendly to the point that online trading is now being billed as the single most accessible way for an individual to create wealth on their own. In fact, online trading is rapidly becoming a career replacement for individuals and a career direction for those starting out. The Forex market has all of the key attributes we need to be able to consistently trade in an online venue. We can trade this market in either direction. This market has fantastic opportunities. It's the largest market in the world. Daily volume surpasses over $2 trillion a day. It's also the most liquid market in the world. Nothing is as liquid as currencies. When we enter and exit this marketplace, we can do so in a matter of seconds. This marketplace is not hindered by a central exchange. It's traded entirely electronically. Over 4,500 banks around the globe are trading these currency pairs back and forth against each other in this seamless 5-day-a-week, 24-hour-a-day trading session. One of the side benefits of having this seamless trading window is we don't have to worry about price gaps as we do in markets that are traded on exchanges or open and close each day. We don't have to worry about slippage because of the liquidity of this market. In other marketplaces, we may place an order to exit. For instance, in the equities market, when market's moving fast, we may decide we want to exit out of a position, but because the marketplace is not as efficient, there's a delay in the time we actually exit, and we exit out at a different price point. This is known as slippage, and it typically costs us money. This marketplace is one of the most efficient marketplaces in the world. In fact, all the major Forex brokers guarantee against slippage. The reality is if you're involved in online trading or have an interest in being involved in online trading, at some point in time you will be involved in the Forex market because no other market offers all the characteristics you need to be able to realize consistent cash flow on a regular daily basis, and that's most people's objectives. As we start to move forward in the presentation, one of the things I ask of you is one of the things you need to do is you need to evaluate your personality as it relates to trading. The reason why I say that is oftentimes when people first start looking at various programs, what they focus on solely is the profit potential that these programs often tout. And they focus solely on the performance, not realizing that oftentimes that tool that it takes to achieve that particular profit objective may not be realistic for the individual. Oftentimes what happens is we look at particular situations and we focus solely on the performance aspects of those situations when we're making a decision, and then once we become committed to it, we find out that one is we don't want to spend countless hours in front of our computer. We don't want to spend hour after hour in a trading setup. We don't want to expose ourselves to large amounts of risk. We're not interested in holding positions overnight or being exposed to market conditions in a greater than 24-hour period. And so when you're evaluating programs, you need to take these things into consideration because typically all trading programs distill into two distinct categories. There's what's called technology-based trading programs or trading applications. And these programs would be trading systems. That would be trading software. There would be proprietary trading indicators, indicator packages, black box systems, automated trading programs. All of these technology-based trading applications, that's one category. The other side is what's known as trading methodologies or rule-based trading applications. Now, in my career, I've been involved in the marketplaces now for coming up on 2 decades. We didn't get our confirmation on our short trade here, so we're back on the sidelines on our dollar versus yen. That's okay. This particular trading session starts to wake up in just about another 25 minutes. It'll start to get a little more active here. We're just at the beginning of the open of this particular session, so we've still got plenty of time to see some trading opportunities. As I was saying, we were fortunate in our session that we had Tuesday. We had a live trading setup which is recorded and posted on our website. As I was saying, I've been involved in the marketplaces for coming up on 2 decades now. In almost 50% of that time, I've been involved in online trading. I've been involved in the development of a number of popular trading programs, have facilitated thousands of individuals to be effective at trading in an online venue. And during the course of my career, I can see that typically what happens is individuals, when they pursue online trading, is they fall into 2 very distinct categories as well. There's those that are not consistently making profit and those that are consistently making profit. And there's 2 direct correlations to why this occurs. Those individuals that are not consistently making profit typically gravitate to a technology-based trading application first. A piece of software, proprietary indicator packages, something that they're using technology to allow them to make their trading decisions. The reality is close to 90% of the people who come through our doors here at the Trading Institute have purchased in the course of their trading careers some type of marquee brand software or trading program, invested heavily in it only to find out that they couldn't consistently make profit. And the reason why I use the word consistency is because I interact with individuals every single day, and when I discuss how they're doing, how their performance is with a particular program, the typical answer is they always say, well, I made some money using this program at one point in time. And I always ask them, well, are you consistently making money? And they always say, no, I make money, I give it back, I make money, I give it back. And that's whether it's related to the equities market or the options market or trading in the FOREX, but they're using some type of, or options, they're using some type of technology-based trading programs to assist them. And the reality is they cannot consistently make profit with these programs. They make money, they give it back, they make money, they give it back. And the reason is typically they don't know how to correctly apply this technology. Sometimes the technology is far too complex. There's too many choices for them. So they use the wrong tool for the wrong market conditions. The reality is technology trades best under very specific market conditions. First, technology trades best on large time frames. Typically end-of-day activity, monitoring end-of-day price activity. The reason for this is because price then is smoothed out. It's easier for the technology to analyze and evaluate the pricing activity. There's not a lot of whipsaw. So technology, 1, performs best on large time frames. Technology also performs best under very specific market conditions. And that's when markets moving in one direction for an extended period of time. The reality is markets are moving in one direction or trending less than 20% of the time. The remaining greater than 80% of the time, markets are sideways or in range-bound conditions. And so for the first common pitfall of why people are not consistently successful is because they are constantly using technology in the wrong market conditions. The second common pitfall is they continually commingle strategies. They constantly try to use trend-based trading tools in these consistent sideways conditions that we have. So technology trades best on large time frames. Technology trades best when market is trading in one direction for an extended period of time, so technology trades best on an infrequent basis. The reality is what technology does best is it filters large amounts of pricing data, weeks, months, and years, looking for price anomalies in the marketplace. Then alerts the trader of the price anomaly, and the trader then can make a decision whether or not they want to be able to take advantage of the opportunity. The reality is trading technology requires larger amounts of capital. The reality is you have larger risk. The rule of thumb is the larger the time frame, the larger the risk, so too the larger the profit potential and the less frequent the trading opportunity. Good technology-based trading programs may find 1 or 2 trading setups a year. And that's because markets are trending less than 20% of the time. The remaining greater 80% of the time, markets are in range-bound conditions. So once again, common pitfall number 1 is the reason why people are inconsistent is they gravitate to technology. And it's very commonplace now because we're inundated with infomercial after infomercial. We can access whatever type of information we'd like to off of the internet. So the common misconception now is people are truly under the belief that they can